Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 126, taking place on Thursday, January the 28th at 1700 UTC. My name is Long for Wisdom. I'm the Governance Facilitator at MakerDAO right now. I run these meetings. So as usual, we've got a bit of an agenda to get through today. We've got some regular updates. We've got the governance cycle review given us for January, given us the end of the month. And yeah, I don't think we have any specific segments. So we'll maybe, once we get through our regular updates, we'll maybe open it up to some discussion and Q&A. So just as a preamble, please feel free to interrupt or get involved, and we'd like to hear from you in this meeting. So yeah, please don't be shy. All right, I think that covers my hosting duties. So let's get started with the weekly updates. I'll start with governance. So let's see. This week's been reasonably busy for governance-wise. So I started working on core unit proposals for the governance domain or for this governance core unit. And I've been kind of coordinating with some of the other people who are also doing that to try and make sure that we end up with something consistent. And I'm hoping that when I produce that, it'll clarify some of the medium-term goals for governance, since we've kind of pushed off a lot of those for the time being. So let's see. In terms of polls, we saw the centrifuge. There was a new silver drop poll pass an hour ago, which finished an hour ago passed, which is good. So we'll see that come into an executive hopefully soon. We can't sort of set a date just yet, but yeah, it should be coming. Let's see. So this Friday, so we didn't have anything lined up for the executive like at the start of the week. We decided, given that we'd add we proposed the Ether DCIM, which pretty much we'll maybe talk about a little bit later. So yeah, so look out for that on Friday. Ideally, we would have had a sort of on-chain poll for these parameters, but given that the market's been moving pretty quickly and it's been pretty bullish, and we've seen the debt usage go up quite heavily, in combination with the fact that we didn't have anything else planned for the executive, means that it was just sort of kind of free to add it on Friday. I say free, it still costs smart contracts a lot of time to do executives, but yeah, from a governance perspective, it doesn't cause any negative outcomes. So related to that, I wrote up some governance-focused documentation for the DCIM module, which is available on the community portal. I'll be linking to that in the executive. So if anybody's curious about how this works in practice, you can kind of read up on that. And other governance updates. So we're continuing onboarding pros mostly, and Eli slightly as well. So that process seems to be going well, which is good. So the final thing is a number of other governance-related MIPs will probably go public in the next couple of days. Pros is working on, I believe, 3. So we'll see how many of them make it out next week. So this includes the DSS Gov rewards, or that's just governance rewards MIP, and also a MIP managing multi-sigs, and possibly one more, but we'll see. So I think that covers governance updates from me, which means we'll maybe pass it over to Pros to do governance at a glance. Pros, are you good?
Yeah, absolutely. Gonna post the link to the form here. I think it was Emilio who's been doing that for me in the chat. So thank you for that. I'm trying to get better every week. So if you do have any suggestions, do feel free to hop on there and give your opinions on what I can be doing better for governance at a glance. Start with the 3-point summary here. Always an exciting morning when you wake up and see that the DAI supply is at an all-time high. We're above 1.6 billion there. Another thing of note, last week I was talking about how we made it, I believe, is to 116, 1.16 DAI growth per second due to revenues. Today we're up to 1.3, which is awesome. And meanwhile, the PEG is holding very steady, even through in a little graph showing that despite the ETH volatility, the volume weighted average price of DAI has been staying pretty steady. This week I did kind of add a new mini section to the governance at glance, so would love some feedback on that. Calling it, in case you missed it, announcements, to cover things that aren't discussions, aren't signal requests, but should still probably be highlighted in the meeting. The first of which we brought up last week was the USDC PSM interface that went live. So there's a link to that on this forum post in case you want to swap DAI and USDC. The other announcement from that section is user Blimpa, who's Pablo, has brought Maker News to your inbox. So you can actually sign up for a Substack subscription. Currently, they're testing out sending the governance snippets from this call, as well as a version of the Maker Relay. So go ahead and sign up for that. And of course, any feedback you have to provide would be welcome. As far as active discussions go on the forum, we do have two pretty interesting ones from a risk perspective. First one, Long for Wisdom kind of teased for Pramosh, talking about the DCIM ETH-A parameters. There's a long post kind of detailing some of the risks involved with continuing to increase the ETH-A debt ceiling and some of the measures risk is considering taking to help mitigate those risks. So do check that out and engage if you have any thoughts on the matter. And in a similar vein, Seb brought us a post called Crash in Slow Motion, a scenario analysis, which kind of defines, rather than the value at risk presentation we saw last week, which kind of showcased the tail end losses. Seb looked into a slower decline and the risks we'd face basically due to the box parameter and how much collateral we're able to put up for an auction at once. Signal requests, we got 3 new ones here from Ultra Shupi, and he is on the call, so I am going to have him detail the last one for us a little deeper here in a moment, but I'll go over the first 2 here. First is to raise the ETH-A debt ceiling. That is what caused Pramosh to talk about the DCIM, but that signal is live and you should give your vote there. Also put in one to increase the DAI savings rate that has been at 0% since September, and there are a varying number of options for signaling if you want to raise it, and if so, how much you'd be wanting to do that. So for this last signal request, I am going to go ahead and toss it over to Tim so he can give a brief explanation as to what's on there.
Yeah, thanks for putting me on stage. Yeah, I mean, for me, it's essentially mostly about that we are constantly fighting right now with keeping up with the demand of DAI, I have the feeling. And yeah, I mean, and I've been spamming the forum with a lot of debt ceiling increases for ETH-A, and basically all of them were answered by yeah, we do have a severe issue with risk here. And of course, just increasing the surplus buffer is not a direct effect that we are going to see, but it's probably one of the best things we can do beside raising the stability fee. And I would rather not go ballistic with the stability fee like we did last year, where we had something like, I don't know, 15% or something like this on ETH-A. I would rather just, yeah, stop burning or not continue burning again, and instead just accumulate into the surplus buffer to at least hold up some of the risks that we are going to get exposed. I mean, the surplus buffer is probably going to get filled in 5 to 7 weeks, so we still have plenty of time left, so there's no real urgency. But I mean, yeah, just from the comments we saw on Primoz thread about the IAMDC parameters and also in my signal about the FE debt ceiling, plenty of people were asking for, okay, so what else can we do? So I just had the feeling that it's about time to raise this question right now. Yeah. If it's needed to prolong the signal, I'm fine with that. We could do it for 3 weeks as well, but I don't think that anything is going to change. It's probably going to get worse, I think, in the next weeks.
Awesome. Thanks for that update. One little bit I did also want to highlight for that is, in addition to signaling for increasing surplus buffer, it does also give the option for people to vote on if they want a percentage to still be directed towards the MKR buyback and burn. So the link is on that forum post there. And yeah, go ahead, give your signals. We got other fun updates in terms of help wanted and our continual community calls. And again, I'm seeking some feedback for the segment in general. So that's it for me. Thanks for listening.
Oh, really quickly, because it kind of fits with what you're saying regarding the surplus buffer. This coming Tuesday's community call is actually going to be a panel discussion about the surplus buffer that includes a ton of people that are very active in governance. And so yeah, just wanted to throw that in there since it was fitting.
Absolutely. Good highlight. Thanks, David.
Yep, thank you both. Cool. All right. I think that mostly covers governance updates for the week. So with that, let's maybe move on to smart contracts. Chris.
Yeah. Everybody, Chris on the smart contracts domain team, your smart contracts domain team. So last week we had a weekly executive on the 22nd, which passed. Some of these are getting so long, I think I'm just gonna like hit on the highlights, but we added 2 new collateral types, LP tokens. That one of them was Uni V2 WBTCF. The other one is Uni V2 USDCF. TUSD debt ceiling went to 0, and the PSM USDCA was set up to be lerped up to 500 million, I believe. And then dust for all of the collateral types went to 2,000 DAI. Also noteworthy is the first time we've done this with a protocol, but the Vault Compensation Working Group payment went out for 12,700 DAI. And there was an Oracle whitelist for Instadap that all got approved in that spell. And then everyone did a really great job like getting on that. And then on Monday, we had the monthly executive, which went out and also passed. I won't cover all the stuff in the monthly executive because I'm sure that'll probably be covered later. But that means that all of that is ratified now. So for last week, we also have 2 collateral assessments that Sam did for Uni V2 DAI USDC and Uni V2 F USDCT. I'm sorry, USDT. And so those 2 LP tokens are probably going to go in next week. There's no collateral that's gone to Covan, and I'll just make a note on this. We probably won't see this with the LP tokens. They're considerably difficult to get on Covan because we need kind of the entire Uniswap kit to be there and actually be functioning correctly. And so we were able to do it with the first one, which I think was a good test case, but it's very difficult to sort of create this for our test nets and for Covan. So right now, most of these are going straight out to mainnet. So so there probably won't, while we're doing LP tokens, you're probably not going to see those hit Covan. There was more review of the DSS exeklib that occurred last week, and for work on the collateral priority sheet, we just did like a really quick gut check on a bunch of the LP tokens that might be coming and sort of gave them a quick assessment. I think the other teams have been working on that as well. For domain team work, so a bunch of the team was heads down making some updates to liquidations 2.0 and also working with the auditors for that. So we've been going back and forth with PwC, and I think tomorrow we have and QuantStamp, and we have another session with QuantStamp to do a full walkthrough with them tomorrow. We have a code frozen version of that, which I'm going to link down here. So that's the sort of code frozen version of the liquidations 2.0 tree. So if anyone wants to just take a look at it and understand it, you know, if you're going to read the code, there's a clip.sol, a dog.sol, an abakai.sol, and some changes in the end that are most of the relevant parts that you'd pay attention to there. And then our team was also pretty heads down in review on MIP 21. So we went through another pass of MIP 21. And then we kicked that back for some changes. And then the very next day we grabbed MIP 22 and we went through a pass of MIP 22 and kicked that back for some discussion and changes. And I think what we're going to do with those MIPs is whoever makes it through that review process first and gets all the way to the end, where like our team is totally signed off on it, that'll be the first one that ends up going out in whichever executive when it finally occurs. So for next week, we don't have any monthlies, but we're going to put, hopefully, like I just said, either MIP 21 or MIP 22 on Covan. That might happen next week. It might be a week out from there. The Friday executive for next week should have that UniV2 DAI USDC and the UniV2 USDC F in there. And we're also working on assessments for UniV2, Uni F, Link F, and Aave F. So 3 more LP tokens that the mandated actors had discussed. And then for domain team reviews, we have still MIP 25, which is a flash mint module that we have to take a look at. We have MIP, I think 30, which is the farmable CUSD crop join adapter. So we're kind of looking at those, and I think there's some other stuff, like we might actually try and get the Vox out just because it's pretty light touch, quick review, and we'll push it out. And I think that we should really discuss the keg soon as well. So that's everything that I had covered. If there's anyone else on the smart contracts domain team that didn't hear something I should have mentioned, feel free to speak up now, or if anyone has questions, speak up.
I think it's important to also mention the advancements that Tanner has been doing in formal verification.
Yeah, so we have the foundation has a new team member, Tanner, who's been driving the push towards like finding the right sets of tools that we can use for like fuzzing and formal verification, and the types of sort of security guarantees that we can give. And we're hoping to apply that to some of the liquidations 2.0 stuff. So yeah, so Tanner's been pretty heads down in that, almost tangentially to our workflow. So thank you, Tanner, for the work.
Okay. If that wraps up smart contracts and there are no questions, we'll maybe move on to. Actually, maybe Tim had a question. Tim, do you want to read that out, or are you?
Yeah, I'm actually not sure if I got your point right.
Oh yeah, so I was just mentioning that the larger we grow the surplus buffer, so the surplus buffer grows off of interest rates that go towards you know, all of the various vaults that we have. And at some point, people actually need the DAI generated from those interest rates. They need to be able to find it on the market in order to pay down their positions. And so there's some inflection point where if the protocol hoards too much of those interest rates, it would end up breaking the peg high because there'd be demand for them. Now, I know that the PSM is kind of looked at as this like way that we'd probably regulate the peg, but it would regulate the peg at the expense of sort of ingesting a bunch of other stable coins. So maybe we don't have a peg breaking high issue, but we'll have a ingestion of like more USDC more of the USDC in the PSM or whatever other stable coins we put there. So just worth noting that you know, there is reasons for that surplus buffer to hit the market. So
yeah, totally. I totally agree. I just doubt that the inflection point is at 2% or 3% or whatever right now, at least. I mean,
yeah.
back in the that was on the con side of the initial signal that DAI in the surplus buffer is DAI taking out of circulation, and for that hurting, at least, yeah, it probably hurting the supply side. But yeah, just looking at the amount of DAI getting minted right now, basically not by stable coins, but by non-stable coin assets, is so big that I just doubt that we are near this inflection point.
Yeah, I think we've probably outpaced that inflection point by quite a bit over the last year. So yeah. I think a year ago, this probably would have we would have seen this in the market, but yeah, not today.
All right. With that, let's move on to oracles. Nick, do you want to give us a quick update?
Sure. So Brian and I are kind of finalizing the details that ABDK requested from us. So we'll kind of be packaging that and sending that off to them to begin the audit of the LP Oracle, right? And we're all very excited for that, because as we add more LP tokens, we're increasing our exposure to that Oracle, right? And we do at some point want to raise the debt ceilings on those, because as we've seen, with all three of the LP tokens, that we've onboarded, they've all filled up, to the 3 mil debt ceiling maximum in less than 24 hours. So the demand is there. So given that we've seen that type of untapped demand, I think Mooney just mentioned it, right? We're going to be kind of pursuing and aggressively adding more LP tokens, right? So all the ones that he listed out earlier, which I think is the right call. But kind of after that, we're kind of in this what do we do now kind of position. So after, let's see, Uni ETH, Link ETH, and Aave ETH, the remaining LP tokens are not very high liquidity. So the question is, what do we do after that? Do we try to start seeding new liquidity, liquidity pools that right now don't really have the liquidity in them to generate significant fees? It's kind of like a chicken and the egg problem, right? If there's no liquidity, no trades are going through, no feeds are being generated, and so no one's putting in any liquidity. But if you can jumpstart that liquidity, then you can generate fees, right? And in particular, right, for these things, it's not that anyone has to manually actually start, trading on Uniswap, say between, DAI, wrap BTC or DAI USDT or something. It's purely a function of the routing that, the aggregators or even the one that Uniswap uses, right, will start routing trades through that liquidity pool. So that's definitely one option where we can choose to see how we do, right? There's no guarantee that we actually manage to boost liquidity in those. So it might be a waste. Waste of our time is a little bit mean, but it might not be the best use of our time. The alternative is that we start focusing on other LP tokens, right? So case in point, SushiSwap has a ton of liquidity, right? But right, and it uses the same. It's a fork of Uniswap, right? So it can use the same exact LP Oracle that we use for Uniswap without really any changes at all. But with the caveat that no one will use those if they don't get the sushi rewards, right? Because you're getting like 80% APY on some of those SushiSwap pools. But the majority of the rewards are not coming from the trading fees. The majority of the rewards are coming from the sushi allocation that you get. And so just onboarding the raw LP tokens, users won't be able to get those sushi tokens. So it might not be that attractive. Now, that being said, I don't know if I want to call it out. Maybe I'll let Sam talk about this, but there's he's made some interesting changes to the crop join adapter that might make something like this possible. Sam, I don't know if you want to jump in real quick.
Yeah, sure. So I opened a pull request to extend the crop join to support the SushiSwap Master Chef rewards distributor. So this basically, I don't know if many people know this, but crop join has two pieces. There's the general sort of rewards token join adapter, and then there's the compound specific strategy. So basically the crop join itself is generalized, so you can use it for any sort of rewards program, including Uni and SushiSwap. So yeah, it's really easy to kind of add in these different adapters. So I have a not quite complete yet pull request, but we'll be able to use that to basically leverage our existing crop join that was just passed in the MIPs proposal for SushiSwap.
Yeah, and so I think that's that maybe prioritizing MIP 30 for next month, which is crop join, might be a good idea. Just because, right, then after we get MIP 30 in, right, then we can do it for sushi as well, and kind of get those sushi rewards, right? I mean, if you're just to give an example, right, I think the DAI ETH pair is giving 70% APY right now on sushi, and if you let people take like 3x leverage on that, you know, you're giving them like 210% APY. You can charge a really healthy cut of in stability fees if you want. So I think those things have kind of huge potential, you know, not just for DAI generation, but also for stability fees. So that's I think that's kind of the next big plane that we want to tackle. So yeah, so going back to oracles, and so another kind of thing is that, right, Uniswap at one point will release Uniswap v3, right? And that means that you know, this huge demand we have for our Uniswap v2 tokens could disappear relatively quickly. But I highly doubt that SushiSwap is working on any L2 stuff from my conversations with them. So I think the Uniswap stuff is a little bit more of a sustainable type of revenue, at least in the near term. Marc-Andre, who's one of the guys on my team. He's you guys may have seen him around in the governance forums. He's starting to become much more active and taking up this type of governance liaison type of role. He posted a proposal in the Oracle forum to kind of create 17 different Starkware oracles for DYDX. So we are currently testing those, and I think the poll should go out for those on Monday. The executive probably won't be if the polling vote passes, the executive would not be the following Friday. It would probably be staggered a couple weeks out, because we still need to work on some of the smart contract side stuff with Starkware to make sure that everything's hooked up there. But that'll definitely be exciting because it'll be the first time that we do any Oracle work on L2. And I think that is it for me this week. I probably rambled on a little bit too long anyway.
No, that's all right. Has anybody got any questions for Nick before we move on? Okay, let's move on to risk then. Primož, do you want to give us a risk update?
Yeah. So Monet Supply on our team just finished risk evaluations for 2 Uni LPs, and these are DAI USDC and USDT ETH. Both evaluations are currently in the review, and I think they should be published in upcoming days, so we can onboard it next week. And next week, as Chris mentioned, we'll be also working on additional batch of evaluations for Uni LPs. And this would be UniETH, LinkETH, and Aave. And of course, these pairs have high potential because they reach high capitalization, high APY, and it's also shouldn't be a problem for us listing them because we support all of the underlying tokens from risk perspective, I meant. And yesterday, I think this was discussed already today, I published proposed parameters for debt ceiling instant access module for ETH. And we propose this change to be included in tomorrow's executive. And this is because we don't want to have another event of full debt ceiling utilization for ETH and have these urgent votes because they're also pretty annoying for smart contracts team. Of course, also business related reasons. And I also mentioned why further increases on depth of debt exposure on ETH, what may lead to, which is that we might need to start increasing rates more aggressively because this will be basically our only tool to compensate for increased risks. if we, of course, won't be limiting debt growth with debt ceilings, which was some kind of consensus among community. And also because it's less likely we can increase surplus buffer in short term, or even box parameter, or even liquidations 2.0 won't be released like this month. So yes, the rates are basically our only tool to to lower the growth of debt exposure if it again starts ballooning. So we'll probably discuss this next week, because we have rates meeting, and rates proposal should be also out early next week anyway. And in the upcoming weeks, we'll work on additional set of debt ceiling instant access parameters for other world types. Probably we'll start with the ones which are most active in terms of debt DAI minting. And this would probably be Bitcoin A, Link A, and Uni A. And then we'll go from there, so we can have this module implemented for a majority of world types. So that's about it for the week. There's, of course, a lot of ongoing regular work. We're currently updating risk premiums because we need them for rates group, which is next week, as said. Also, I'm finishing a budget proposal. So I'm planning to catch the deadline next week for monthly cycle. So it should be out early next week, or even at the end of this week. And is also further developing credit risk models. And that's it, actually, from our side this week, not too long.
Great, thank you, Pramesh. Any questions for Pramesh before we move on? All right, in that case, let's move to reward assets by our newly ratified reward assets, well, risk facilitator. Sebastian?
Yeah, I will start by thanking you all for onboarding me as a risk facilitator under the previous framework, just in time to move to the next framework of core units. So that's awesome. So on the news, yeah, I've posted a post in an analysis of what would happen if there is a crash in slow motion. Slow motion is the term of crypto, so it's still a big crash, but slower than what we can expect in a Black Thursday event type. And sadly, the news are not good, because even if the drop is quite small every hours, we still end up losing a lot of money. But we can maybe hope that some people will manage their vault, and if the gas price are not too high, it will end well for us. And the good thing is when the simulation shows that we earn a lot of money if there is a crash. And we see that earlier this month, when there is volatility, either we earn a lot of money or we can lose a lot. So it really depends every time. More on real world assets, we have published the centrifuge contract document. So we have studied all the documents of centrifuge assets. So it's meant for New Silver and Console Flight will be released soon. So there are more than 100 pages of contracts. And we have seen no big stoppers in those contracts, just small stuff to figure out. I want to point out that everything that is currently done for New Silver and for Console Flight are for small experiments. So small being less than 5 million. Just like we do for the PSM and for UniLP. But when we will grow to bigger experiment or collateral types, even for if New Silver increase the depth exposure, we will add new layers of securities on top of what already exists. And we are working a lot as well to find how we can increase or scale real world assets, because there are still a lot of issues that need to be solved. So we are working both in terms of the legal implications of scaling real world assets, and still working on how we can lend for long term to provide capital for other type of real world collaterals, and with third party providers that can manage a portfolio of real world assets. So that will decrease the load on MakerDAO and just move the exposure or the load to a third party. And this will allow us to increase the scale of real-world asset quite easily without being a huge bank, so something like that. We will also publish soon an onboarding workflow for asset originator, because currently it's quite complex for an asset originator that come from the traditional finance to understand how MakerDAO function and what are all those governance poles and everything. So it's always a bit messy to discuss with them because there is no clear framework. And even for us, sometimes it's a bit difficult. And lastly, we had a lot of meetings with a lot of prospects, collaterals that are under evaluation, and other people that can help somehow and help us to shape how we can grow MakerDAO, at least with dealing with traditional finance. So that leads to the core unit proposal I have published in the forum. So there is one difference between real-world assets. It's moving to real-world finance. Just a small difference to just include as well some other stuff we are working on, which are usually some concepts that exist in the traditional finance, but are not usually used in DeFi. For instance, all the stuff that like accounting and knowing if there is some DAI in the surplus buffer or not, and mainly the implication of this question. So there is a cool meeting soon next week, on Tuesday. And also make the interface with the traditional finance, because I expect that in MakerDAO, while we grow, we will have more and more interaction with the traditional finance, not the retail side, which are quite good at that already, but with the financial institutions. And we have already some contacts with them, and just to have an interface and try to work the same language, because there is a big issue on the language barrier between traditional finance and DeFi. And yeah, that's about it. In the core unit proposal, there is one sentence to explain how governance can influence the work of the core unit. I think this is key, at least for this core unit. We are providing competencies, but we can work on whatever governance think it's a good thing to do. So obviously, any input is always welcome, because we want to work for the DAO, whatever that means. And that's about it. If you have some questions about any of those items.
Great, thank you, Seb. Yeah, that's very thorough. Like whenever you do an update, I'm always kind of amazed by like how much you're covering. So that's great. Yeah, if there's any questions for Seb, feel free to interrupt now, or we can come to them at the end. All right. With that, I guess we'll pass to operational support. So Amy and/or Juan, do you want to do an operational support?
Yeah. This so as I mentioned last week, we're gonna kind of combine powers. So this week I'll be giving the update, but next week Juan will be, and vice versa. Before I start, I want to also give a chance for Juan to say something, given he's now our newly mandated operational support joining me. So we have two facilitators, myself and him. Juan, do you want to say something?
Oh no. Yeah, sure. No, same as Seb already mentioned. I think we're happy to be here and happy to form part of this community. I think that people that I've interacted with already know my passion and enthusiasm. So yeah, I don't know what else to say, to be honest. I'm glad the camera is not on.
Words we can all live by.
Awesome. So there's kind of two main things: collateral onboarding. So the calls that we do for collateral onboarding. Last week we had Lido protocol, which they're building on Ethereum 2.0 Beacon chain. So users can earn kind of staking rewards. So Juan is going to go ahead and drop links for me. And then the next week, or this upcoming week, I guess next week you can say, is Rhino, tokenized real estate assets on that are giving that are giving loan collateral, tokenized real estate assets as loan, the collateral for a loan. So that's going to be happening in the call next week. Lots happening on the core unit side. So just as our domain as well, we've been working on the proposal. So we're hoping to also get it in by the 3rd. You'll be seeing just slightly more polished than what we originally put in with our MIP 28. And then I did post a TLDR kind of core unit. So this just kind of gives you the super too long to didn't read, although you should read all of the frameworks and give feedback on it. But it'll just give you the short story of the submission requirements, the processes, and the timeframes. I know it is sometimes hard to keep up with governance timelines, but just the main takeaway is that you do have, it is about 2 months for the process to go through. So 1 month of minimum for requests for comments, and then it goes to the monthly cycle. So the February 3rd is really the timeline for getting it in for the March cycle. And so that would be ratified at the end of March. The next one is April. And then as Seb has mentioned, there's a few core unit proposals coming in already, which is really awesome. I think feedback, I saw that some people started giving feedback already is always great. Real world assets, I think smart contracts also just put one in the chat that was more around what they're thinking. Theirs is quite thorough in terms of their team philosophy, for example. So you'll see kind of a variety of different applications and details in the applications. And then we'll be submitting one as for operational support. And then as well as you heard with risk, Promosha is going to go for it as well. So you can also join the hashtag core unit operating model onboarding Rocket Chat channel. That's where you can post something that's in before you even make it a MIP if you want to discuss what you a core unit you want to work on. That being said, there is also this core units I wish existed post that IMEO recently posted, which is really great for kind of brainstorming and kind of giving feedback on things that you wish you wish there was a core unit for, but maybe you yourself necessarily doesn't want to start that core unit. And then the other two is to watch this YouTube video that it's a recording of the core units overview plus this blockchain accounting service called accountable.dk from Dennis. And that will, and in that piece, he talks about kind of the incorporation, employee payments, taxes, fiat payments of what you might have encompassing a blockchain company if you're thinking about starting a core unit as well. So highly recommended. It's super useful. You can always reach out to him for more questions as well. On behalf of operational support, we'll be gathering services that we hear. So there's, for him, for example, we have him as one of them. We'll also have like Opolis. And so you'll kind of see a stream of people who might present their services that they can offer, facilitators or contributors working in the DAO. And then last but not least, we do have a Know Your MIP number 4 that's going to focus on KEG streaming payments. So the first half is going to be pros presenting kind of the non-technical side. There's a MIP coming with that as well. And then our favorite Sam is going to talk about the technical questions around how the KEG might work. This might be useful if you're working on a core unit and you have questions about how you want to receive your budget. There's a lot of, I've been hearing a lot of other questions around that. So highly recommend coming to that next Friday. And that's it for us. If there's any questions, I'll pause here.
All right. Yeah, thank you, Amy. Yeah, it's kind of exciting to see how quickly the core unit, all the progress, I guess, is being made in the core unit stuff from multiple domains. So it kind of feels like there's like a lot of people kind of been wanting to do this for a while, and kind of now the dam's broken and everyone's kind of doing proposals at once, which is good to see. All right. So with that, let's move on to, I believe Anna is going to give us an update for community development.
Hey everyone, my name is Anna. Some of you may have seen me or worked with me in community development, and I have a few updates for you from that side. So for this month, we had a lot of applications come in for the meetup program that David runs, and we had 16 applications and 14 of them were accepted. There's also a Latin American DIE action group working that's completing their second quarter of operation, and they will do a retro and provide some more metrics of what that program was and what they were able to accomplish. And then on Tuesday, Seth and Kevin from SourceGrid came to the community call with David, and they talked about some new weight changes in the forum implementation. So if you would like to see that, I'm gonna drop the replay in the chat here. And then, like Peyton already said, updates are coming to Substack. So if you would like to receive updates from this call, we put together a summary that gets posted in the forum. Or if you would like to provide more feedback on what kind of updates are really useful, you can drop that feedback in this thread. And to sign up for updates right here. As well as there's a team in community development that works hard to put out a maker relay every Monday. So if that is something that the community would like to receive via Substack, you can put your requests in this thread that I just posted in the forum. And that's it for me for this week.
Great, thank you, Anna. Yeah, if anybody has any questions on community development happenings, feel free to ask. One note on the SourceGrid stuff. So, as I mentioned, and as Prose has been sort of posted on the forum, the weights are changing slightly going forwards for the SourceGrid DIE distributions. So hopefully this won't have too negative of an effect on any individuals, but there may be some volatility in the first week. So please kind of keep track of how that changes and kind of provide feedback and read up on the changes to try and, I guess, get a better idea of what we're going for and to leave any feedback, please. Thank you. All right. Cool, so that covers us for ComDev. So let's see, so I've got PSM update down from Sam, but I don't know if there's really much more to update about at this point. Is there anything you want to say, Sam, or?
No, I mean, other than the increase on the debt ceiling, yeah, there's really nothing new.
Cool. Yeah, I mean, going forward, like there's obviously potentially a lot of cool stuff we could do with the PSM or like that kind of paradigm. Like there's like other stable coins and other and like potentially parameters we can fiddle with, right?
Yeah, for sure.
So interesting to see kind of how that evolves over the next little while.
Mm-hmm.
All right, brings us to MIPs. So we got Charles here? Yeah, we do. Charles, are you doing MIPs this week?
Yes, I am. Just gonna.
Yep, there you go.
Yeah, sharing screen is not working currently. Just 1 second.
Okay, that's weird.
Well, while we're waiting for him, I'm going to post up something that Greg did a great job promoting MakerDAO on Real Vision. So take a look. I just posted a link there. So thank you for doing that, Greg.
I saw that in the chat. I saw
Yeah,
that in
he
the
was
chat.
on Real Vision. That's awesome.
Yeah, I mean, perhaps someone could briefly explain what Real Vision is to people who have no idea, like me.
It's all the big hedge fund managers. Usually you subscribe to it for like almost like 500 to 1,000 a year. Sometimes the other big subscriptions like almost 5,000 a month. But they made it free for everyone on this video. And you have mega people from Wall Street and Robin Hooders and all that kind of learn about what's going on in crypto and other parts of finance to what's going on in macro bonds. They last year they decided to do a whole entire section devoted to crypto. And finally, we had one that they had one video on Maker before, but it was only like 5 minutes. They finally devoted a good 30-minute video that Greg did.
Awesome. Yeah, that $500 to $1,000 price tag sounds like the reason I haven't heard of it. But yeah, that sounds great. I'm sure Greg did a fantastic job.
All right, it should be good to go. If you could allow me to share my screen again. I just had to quit and restart long. Perfect.
Okay, try again now.
There we go. All right, so this week we had the monthly MIPS executive vote for January get published. And the results were that the executive passed today and should be available for execution on the 30th at 6:51 UTC. The proposals that passed this month are MIP 29, the PSM, the crop join, MIP 30, and as we all know already, the onboarding of Seb, Sam, and Juan as facilitators, as well as the governance communications declarations of intent. And today Long is going to just perform the governance cycle review, assuming after this, to summarize everything that's happened this month, as well as discuss any plans or tips for February's governance cycle. So next Monday, we have the beginning of February's governance cycle. The formal submission period will begin on Monday, February 1st. And I believe we agreed upon this, but it should end this Friday. In the past, we had it end on Wednesday nights at end of day UTC, but given that the next stage of inclusion polls happens the week after that, it just makes sense to extend it in case people are away on certain days, but happy to discuss that after this as well. So to all the authors who have proposals who have completed their RFC period, and if you aren't aware, if the month has expired, just reach out to me. Or if you have any questions about the whole entire formal submission process, just let me know. Next Thursday, we're just going to have the submission review for confirming which of the formally submitted proposals are eligible to be put forth for inclusion polls on the following Monday, February 8th. So we have 3 proposals in the conception stage. As Seb mentioned earlier, they're all related to the real world finance edition of a core unit. So the first one proposes a core unit to pursue the real world asset work that has already been happening, but more formally, and generally just aims to help MakerDAO take over the traditional finance world, to say the least. The second proposal is modifying the core budget unit for this core unit. So it proposes to officially onboard this informal team using this new framework that was recently proposed. And lastly, just onboard Seb as a core unit facilitator for this unit. So in terms of requests for comments, we have a record-breaking amount in this stage right now. We have a full 18 proposals currently sitting in it. The first one has been there for quite a while, and there's some progress updates, I believe, but it was on the DSS Gov, so the governance contract redesign, which is still being formalized. We have MIP 31, the active reserve AMM. So that's a technical proposal for an active reserve based on the Uniswap V2 contract. Next, we have the PSM for compound mixed exposure, which provides an extension to the MIP 29 PSM, essentially allowing the PSM to leverage USDC via DAI using CDAI instead, and converting USDC to CUSD using that same joint adapter. We have MIP 33, the Maker Stability Price Module, allowing the governance community to defend the MKR price by pre-allocating DAI to buy at a predefined level. We have MIP 34, the KEG streaming payments module. So maybe some of us are quite familiar with this, but this proposal formalizes smart contract implementation for streaming of payments for Maker. We have MIP 35, which is the PSM for compound mixed exposure with the addition of farming. So it's very similar to MIP 32, but it allows the conversion of USDC to DAI and DAI to USDC while earning yield. MIP 36, we have compound governance DAI leverage. So this proposal defines a peg stabilizer controlled by governance, which uses the Flash Mint module. So that's the 25 proposed by Sam, with MIP 35 or 32 for DAO lending to leverage MakerDAO's position on CDAI. MIP 37, the static reserve for governance. So it defines a static reserve which can receive any tokens from any address as the contract allows it and governs to withdraw them. And then the rest of them are for the recently proposed DAO framework MIP set. So MIP 38, the DAO primitive state, which defines all the states related to core units, budgets, and facilitators. The core unit framework, which defines the managing of core units and how to modify them in the DAO primitive state MIP. And MIP 40, which is just the general budget framework for managing budgets and modifying them for core units in the DAO primitive state. So there's 3 slides. As I mentioned, there's a lot of proposals in RFC right now, but I'm almost done with it. We have MIP 41, the Facilitator Framework. So it defines the onboarding process for getting added as facilitator and a sub-proposal process for managing those, modifying, removing them, all related to this MIP set again. And the last component of that MIP set is MIP 42, which is proposed compensation addendum for all MakerDAO contributors. This proposes to pay contributors partially in time-locked MKR to increase value returned to contributors and directly align their interests with those MakerDAO. Actually, a correction, this is not part of that MIP set. It's an addition to that, which could be a complementary proposal for the core unit MIP set, but it is not part of it. And then lastly, the last MIP, which was recently proposed last week, it details the term lending module proposed by, I believe, Yield Protocol, and it is a Maker module to buy and hold tokenized fixed rate, fixed term loans to maturity in order to encourage a fixed rate lending market with Maker. In terms of sub-proposals, we have the declarations of intent for onboarding new collateral types backed by the B protocol. And the last 3 are MIP amendments. So these 3 are changes to MIP 0, MIP 5, and MIP 16, all related to the newly proposed MIP set for the DAO primitives and DAO framework. So it's altering the previously ratified MIPs to align further and work with the current MIP set for domain structure. In terms of pre-MIP discussions, we have a couple new ones. First one was vaults with lower liquidation ratio to collateralization ratio. A post on allowing MKR and DeFi liquidity providers to vote. And as usual, there's quite a bit of conversation still happening with respect to the liquidation system redesign and the technical summary. And lastly, the declarations of authority pre-MIP discussion. So if you have any ideas for MIPs at all, please go ahead and post them in the pre-MIP discussions. It's definitely an active part of the whole forums. So that's just a reminder, if you do have any new ideas, to go there or post in Rocket Chat. In terms of collateral onboarding updates, we are awaiting an executive vote next week for the UniV2 pairs of ETH USDT and DAI USDC. We're also awaiting executives on the RWA, so that's RWA 001, which is success, and potentially the MIP 22 for centrifuge liquidation. So that will, I'm not sure if the smart contract team has a further update on that, but the ones looking at next week are these 2. In terms of January's Greenlight polls, there's 3 days left to vote, so don't forget to do that. We have 10 assets currently being voted in, and which, as you can see, there's quite a bit of interest on the polls for the UniV2 pairs. But yeah, that's it for my update today. If you have any questions, just let me know now. Thanks all.
Great, thank you, Charles. Yeah, if anyone has any questions, feel free to interrupt. But before I forget, I will do the actual MIPS thing that I'm supposed to do before we move on. So this week it's the MIP governance cycle review. So this is supposed to be kind of looking back on the cycle, seeing how it went, if there were any problems, and then looking forwards to kind of the next cycle. So we saw 7 proposals entered into the January cycle. 6 made it past the inclusion polls and were eventually successful. So we lost the only proposal that we didn't continue with was the declaration of intent to engage Nexus Mutual to ensure the Maker protocol. So the ones that were successful were pretty major, right? We ratified 3 new mandated actors, and we've kind of already covered it, but congratulations to Sam, Seb, and Juan. And we also approved 2 fairly important technical proposals, right? The PSM, or formalizing the PSM, and also including crop join. So in terms of voting, like the exec passed reasonably quickly this month. Like previously, we've seen it like go down to the wire. It's good that it didn't this week. I don't think we had any particular problems last month with the cycle. Like if anybody, I guess this is kind of everyone's chance to kind of chime in and say, or to disagree with me, right? But it didn't seem like there was any sort of major controversies or concerns or anything. So looking forwards then, I'm not entirely sure what we're going to see in February at this point. There's kind of a lot of MIPs in RRC that could potentially be submitted. If you are planning on submitting things in February, like feel free to chime in. But I do think we're going to see quite a lot in March. So we should maybe kind of be prepared for there to be quite a lot of proposals in that month. Especially if we see budget proposed like core unit like budget proposals as well as the actual core unit MIPs themselves. So regarding the formal submission deadline that Charles mentioned earlier, not sure you mentioned that to me, Charles, though we made it Friday.
Yeah, we had briefly discussed it, and I wasn't sure. I wanted to more have an open conversation about it because sometimes people do forget that. But if we do want to just keep it from Monday to Wednesday, that's cool because that is what's written.
Yeah, we should kind of discuss because it's potentially problematic for us to just change or to like start ignoring bits of MIPs, right? In terms of so from kind of my side, like for each of the MIPs that's formally submitted, we need to do inclusion polls, right? So having that open till Friday might be a bit awkward in terms of governance facilitators then having to queue up the polls over the weekend. There's also technically supposed to be the requirement of us, like of governance facilitators reading through all of the MIPs and making sure that they're like valid to be submitted, which perhaps doesn't always get done as much as it should do. But technically we're supposed to do that as well, or I'm supposed to do that as well. So yeah, so what I'm saying Thursday, which is kind of what I think. I think Thursday would maybe be the latest, but that kind of still leaves the problem of us probably wanting to like amend the MIP or something, or in some way, which is annoying because it's a lot of effort. So yeah, I think. Yeah, I guess we'll think about it and discuss it a little bit. Wednesday should probably be considered the deadline. If anybody is having a lot of troubles finishing anything and they want to ask for an extension, that's maybe fine. We can consider that on a case-by-case thing. But like in general, if you haven't kind of got in touch with me and or Charles by Wednesday and you're planning to submit something, like you should tell us, right, that it's going to be late. So hopefully that kind of covers people's confusion on that, or potential confusion on that. All right, are there any comments, questions, or thoughts about MIPs people want to share, either in regard to this previous cycle or the next cycle? Okay, sounds like we're good for MIPs discussion. All right, so maybe we can move on to sort of general QA, kind of general discussion. So I know a couple of people had things they maybe wanted to bring up last week that we didn't really get time for. We maybe didn't get quite as much time as we would have wanted discussing Andy's kind of risk presentation. I believe Lucas also proposed discussing something, but I've now forgotten what it was. So I'm hoping he remembers. But yeah, anyone feel free to kind of chime in. Yeah, didn't you Lucas? Something about?
Yeah, it was about lending, making term loans with MakerDAO. And it was after a post I made on the forum that most people agree in the community to lend some DAI for an extended period of time. So currently all the vaults are endless. You can borrow as much as you want, as long as you want, at least as long as you want. Except at some point you will have stability fees that will increase if the governance wants you to find a new loan somewhere else. And that doesn't work for the real world because you cannot increase stability fees when you have an asset, for instance, real estate. It doesn't work like that. So people need some kind of stability. So the idea was to be able to lend for, let's say, 5 years at, let's say, 2%, 3%, whatever, and not changing it afterwards, and not being too stressful on the daily fluctuation. So what is that interesting and how it does change from what we are doing already? As we saw, we are liquidating very quickly when there is a drop in the ETH price or drop BTC. And that works well until it doesn't. So if there is only some vault to liquidate, we make a lot of money. We are all happy. We've made 25% of your revenues this month from liquidation, so that's cool. But when it fails, it doesn't help to have to liquidate something else. In a real world, what we can have is some fee-generating assets, like Uniswap pools in the crypto, but let's say rents. And you know that you are getting paid every month a certain amount. And if your fees on your maker loan is lower than that, you know that with the rent, you can pay the stability fees and decrease your maker loan. And that after some period of time, you can finish the maker loan just by getting the rent in. Obviously, that works well when you have a portfolio of real estate. So if someone doesn't pay his rent, it's not a big deal. That's always the idea with real world assets. So that changed a bit on how we see the loans we are providing to our customers, but that aligns maybe a bit better with the real world. Because currently with the real world, we are making short-term loans. So in case of Matthew, there is a 1-year notice. In case of New Silver, there is it's only 2 years, but I have and for Matthew, it's the same. They are building something or renovating a real estate property, and they are selling it. And that works well if they are able to sell it. But if they are not able to sell it, you have either two choices. And it's the same with ETH. If you are not able to sell ETH at $1,000, but the only buyer is okay to buy it at $100, do you want to sell ETH at $100 and make a loss of 90%? Doesn't make any sense. For ETH, obviously, there is no fees that are coming, no revenues to pay for the loan. So there is always a risk. But if you invest in real estate, you have the rent coming in every month, and it will most likely be the same the months after. Obviously, there will be a small variation, but if the rent is there, there is no stress to liquidate because there were some revenues that cover the loan. And for some assets, not for all, but for some, it might be more smart to focus on the ability of the borrower to repay the loan than the value of the collateral on a day-to-day basis, on a mark-to-market value. So that was the kind of thought we have, and Lucas was interested as well, I think.
Yeah, and I mean, I think the thing we also have to consider is like, how long will we still be in a 0% DSR environment? And then like, what would we be willing to, like, if we start onboarding these like long-term loans, like, right, say we have like 200 million DAI worth of 3% loans, and we're then pushing the DSR up to 5% because because no one wants to have DAI, or we can actually drive the adoption of DAI through the DSR, right? Like sort of thinking back at what it was like in a few, well, not a few months ago, a little bit longer now. But like, yeah, so the discussion and the question is like, yeah, how do those different factors come in? Like, what do we think is going to happen with the DSR? What is the base rate that we should have? Yeah.
Yeah, and so Monet is right saying that to asset duration should match our liability durations. So yeah, so that points the question of what are our liability durations, because it's not an easy question. So there is still some theoretical work to be done, because obviously DAI, for instance, can be a very long term because we only redeem, people can only redeem DAI at emergency shutdown. But before that, it can depeg, so that might be an issue as well. Maybe Monet, you want to comment as well?
Yeah, I'll comment more in the thread, but I know that traditional financial institutions generally put a lot of work in to make sure that their asset and liability durations are matched, so that if like market interest rates move up or down, their sort of like P&L, their position doesn't change too much. But if we are still committed like continuously to maintaining DAI price at 1, that basically is like us having all of our liabilities be 0 duration assets. And then if we lend out money for long durations, if DAI price goes below $1, we have to raise short-term rates, and that pushes down the value of our long-term assets. So I think it creates a position where MakerDAO loses money when DAI price goes down, which is like maybe a little dangerous.
Yeah, so I think, yeah, we're really talking about duration risk here. And that's why real world assets probably the more suited loans would be short term, right? It's easier than to control the supply and then protect the pack. If you're going to use long term loans, we have this duration risk, exactly what Monet described and you said. And it's more of an issue. So I would always prefer to use short-term loans, but I know this becomes an issue for borrowers, right?
I mean, I think like short-term loans are just have to be insanely cheap, at least at the moment, because they are insanely cheap on Wall Street, right?
Right.
I think maybe a solution is we just need people who are holding DAI. We need to find some people who want to hold like a long-term DAI investment, because if we, like how banks will manage their duration risk, is they'll sell long-term bonds, or they'll sell certificates of deposit that have like a long duration, so that if they loan somebody money for 5 years and then they have a CD that they owe somebody back in 5 years, they're hedged.
Yeah, but even in your case, the surplus buffer can be seen as a long-term liability. So we have at least the long-term buffer, and even above that, there is still some room to work. It's still an open question. I don't have all the answer currently, but I think it's something we should work on.
As an example, though, in commercial real estate, this is why whenever transactions are kind of a snapshot of the appraised value upon closing, and why you don't really do routine appraisals every 6 months or every year, because 95, 98% of the value is not in the dirt, it's in the cash flow stream.
And obviously, having long-term assets is always good to pay the workforce of MakerDAO, as we will have some expenses. So if we lend for 5 years, we at least know that we will get stabilities for the next 5 years. And that covers that can cover all expenses, because all the vaults can be shut down, or the vault can be closed at any time, and that will leave no income for Maker. So there are pros and cons.
It's also an open question about what happens when the DSR, as Lucas referenced, when it starts to increase, what happens to the revenues, I wouldn't even call it profits, but the surplus buffer net number that's caused from real world assets. It should get compressed because as you've outlined, the market external to Maker is efficient. And if it starts pushing real world assets, they'll just refinance. And when they refinance externally, the probability of coming back is not always so certain.
So I think if I remember your forum post correctly, Seb, we were kind of trying to figure out what proportion of long-term assets we'd want in comparison to short-term assets, right? Because I guess ideally we'd want some of both to kind of manage. I mean, assuming there's always going to be some base level of demand for DAI, which is obviously not certain, but you can say maybe have 10% of the portfolio on long-term assets, which we never think that we're going to need to recover 90% of the DAI, right?
Yeah, so the aim of the post was mainly to know if it's something we should work on, if the community and governance has already decided that Maker will only make short-term loans. And that wasn't clear, and the answer for the community is that it makes sense to work on this subject. But obviously, it doesn't make any sense to make it if it's not a good idea. And there is obviously some issues with the DSR, but even in the crypto, Monet and Sam are talking about it. We have the yield protocol, and there is a MIP 30, I don't remember, to integrate FOI DAI into Maker. And that's already some kind of medium term, let's say, and most likely long term at some point, long-term assets. That will be difficult to sell because the price at the end is always the same. But if the interest rates are moving, the price of the bond, FOI DAI, will change with time. And we will probably not want to sell something and making a loss if you know that at the end we will make a profit. So yeah, it's more work in progress or work to be started.
It's going to turn into making sure the amortization schedules of whatever the ending borrower are imply that the principal gets returned during the term of the cash flow, such that that concern you've got at the very end, it doesn't matter.
Okay. Maybe that just about exhausts that topic for the time being. So we're coming up on 25 past the hour, so we can think about wrapping up. Unless anyone has anything else they desperately want to comment on or discuss or bring up before we close out.
Did the PSM put Vishesh out of work? Are we never going to see him again?
Vishesh, yes. So I posted this in the governance call, but I'll repeat it here. Vishesh mentioned he was going to take, I think, some of January off. So we may see him come back in February. I'm not 100% sure. But yeah. So hopefully we'll see him back in a little while. All right. Okay, I think we'll wrap it up there then. So yeah, I don't think there's any final notes or anything to remember. Next week's call will be the same time as usual. So yeah, thank you everyone for coming, and we'll talk to you all soon.
Thank you, bye.
Thanks all. Take it easy.
See ya.